All real estate transactions in Canada are subject to GST, unless they are specifically exempt. The two main exemptions are sales of used residential property and sales of property purchased for personal and recreational use. That means sales of new or substantially renovated residential housing, sales of commercial property, and property with commercial tenants and sales of government property are generally taxable. However, applying GST rules can be complicated, particularly when a property has both taxable and exempt components, when a property has been subdivided, or when vacant land is being sold. Always advise your clients to contact their lawyer, accountant, or local Canada Revenue Agency office to ensure GST is being applied correctly. Sometimes there are questions about what qualifies as substantial renovation. For tax purposes, a residential dwelling is considered to have been substantially renovated if 90% or more of the building has been renovated. This means that at least 90% of the interior area of the building that existed before the renovations began was renovated to some minimum degree. The CRA has outlined examples as fair and reasonable methods of calculating whether all or substantially all of a building has been renovated. A link to these examples is provided in the description below. When listing any type of real estate other than used residential property, verify with the seller at the time of listing whether GST is payable. It is the responsibility of the seller to determine if and how GST applies to their property. Do not make assumptions about GST applicability. Your only advice should be for your client to consult an expert. Do not wait until the seller is considering an offer to find out about the GST, as this could cause the offer to be completed incorrectly and result in a dispute with the buyer. When it is known that GST is payable, wording should be added to Clause 2A of the residential offer to purchase, stating that either GST will be added to the purchase price or the purchase price includes GST. Additionally, Clause 6 of the residential offer to purchase states that the seller promises everything included in the sale is exempt from GST. If GST is payable and is intended to be the responsibility of the buyer, this clause must be struck out. Otherwise, the seller may become responsible for paying the GST without being able to collect it from the buyer. In commercial transactions, the clause provided may be included in the offer to purchase to address GST obligations. Be aware that buyers who are registered under the Excise Tax Act with a GST number and are purchasing property for business purposes have specific obligations imposed by the Canada Revenue Agency. Make sure your clients have consulted an appropriate expert and understand their requirements before writing an offer to purchase. Failure to do so could have significant financial implications for the buyer and their business. Partial GST rebates on the purchase of new or substantially renovated residential property may be available in certain circumstances, if they have a fair market value of $450,000 or less. Sometimes the advertised sale price of a new home will include the GST with a rebate factored in. Carefully review how the GST rebate will work and how it has been calculated. Explain any provisions about GST included in the builder's offer to purchase contract to your client, and strongly encourage your client to consult their own experts to make sure they are eligible for the rebate.